as being one of the unluckiest generations ever in history. You know, you kind of grew up through 9/11. You've been through the 2008 crisis, the subprime crisis, and now you're going to watch the U.S. dollar lose world reserve currency pump. You know, you guys and your brothers are really you lost the generational lottery. I can say that. When Saylor first started buying Bitcoin, he made the comment that maybe 50 million a day in volume was actual Bitcoin. The rest was wash trading. You know, Bitcoin has had a wash trading problem for years. You know, exchanges trading their own accounts to create stimulated volume. You see that in the NASDAQ market all the time. You know, NASDAQ is a network of dealers, right? It's not like the New York Stock Exchange where you have a specialist at this post making a market. You have a network, and NASDAQ is for years guilty of wash trading amongst themselves to create the painting the tape and all these other techniques to create the illusion of volume and to manufacture prices. And Bitcoin had this problem for years. And so when the sentiment changed, you would have an 80% drawdown because there's just no volume. There was no volume. Now, what's different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same. What I've been saying for 11 years, I'll tell you the direction of Bitcoin. It's up. You know, if you hold it for maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame which is not a long time frame, 3.5, 4 years, you're going to be in the black. When I was at the Bitcoin Miami 22, the conference, the difference between that conference and let's say a conference from 10 years ago was the quality of the suits. Right? So the people on stage are wearing, $3,000 suits. Back 11 years ago, 10 years ago, people would show up in torn t-shirts and there were coders and, rarely came out of their basement. But it's the same kind of struggle to come to terms with this emerging asset class. And in a lot of ways, it's the same. You just have a higher grade of speculator. You have, of course, the amount of money that's been flooding the system has increased every year for many years now. I mean, we got to the central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market. So on the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds. I think starting in February with the Russia-Ukraine conflict, we saw the end of a 40-year bull market in bonds and financialization and the beginning of a secular inflationary move in global markets that'll be tied to commodities. Commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, the coupon rate, extend the maturity. That's the way the world worked for 40 years. Now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line, and that's not going to change anytime soon. That's a secular shift in the inflation in the economy, in the globe, that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin. And ultimately, it's going to do well in that environment because as people begin to understand that the financialized world is crumbling, I often say Bitcoin is a risk-off investment. It's hard to make that case with the volatility the way it is. But when you have something, for all the other reasons, it's unconfiscatable, uncensorable, immutable, it makes sense. And it makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. The Fed is still thinking like the world is similar to the way it's been for 40 years. Starting with Greenspan, you had the so-called Greenspan put. Every time markets came down, Greenspan would flood the market with more cash or lower interest rates. And that went through Bernanke, Janet Yellen, Jay Powell. The activist Fed, the model has been with us for 40 years. And that there's no problem that can't be solved by money printing. What happened in February 24th with Russia-Ukraine now is that model is dead. And the price determining factor for prices is shifted from the New York Fed, or from the Fed, to the East, to Russia. Russia, China, Iran, India, Central America, South America, Brazil. Those countries are going to be determining prices going forward. And so the Fed can only operate if the world is on a globalized US dollar standard. But that's no longer the case, on February. So now we're in a new world. And I just think Jay Powell and these guys and Janet Yellen, they haven't adjusted yet. But, markets are cruel, and the market price ultimately works its way into reality. And that gas price isn't going down. We're talking $10, $11, $12, $15 a gallon for gas in the United States. And that do the math, Pomp. That's a fundamental shift in this standard of living for the United States. That's just a fact, because we don't have the ability to control these markets and prices anymore, because people are dumping the dollar. The dollar is not going to be world reserve currency, and the guys with the actual energy are in control. So how are we going to fight that? Let's look at another industry, for example, the ESG industry. The climate change industry, the move toward renewables. Well, that's completely blown out of the water. Germany, which was heading toward 100% renewable, is now going back to coal. Like, all these countries are going back to coal now because of what's happening in the energy markets. And so that's just a total shift. So, I mean, I believe you're a millennial, and Pomp, and I think of it as being one of the unluckiest generations ever in history. You kind of grew up through 9/11. You've been through the 2008 crisis, the subprime crisis, and now you're going to watch the U.S. dollar lose world reserve currency, Pomp. You guys and your brothers are really you lost the generational lottery. I can say that.